As a dividend investor, it can be easy to be distracted by high dividend yielding stocks. But it's just as important to find a company that is growing their dividends each and every year so that you can rest easy knowing your dividend income will consistently increase over time. In this video, we will be looking at Canadian dividend stocks that do not currently have high starting yields, but rather companies that are significantly increasing their dividends each and every year. These types of companies should also have the potential for good stock price appreciation over time, and we will look at how these stocks have performed in the past. We will be going in order from least to most in regards to how much the company has been growing its dividend over the past 5 years. Make sure you stay tuned until the last stock, as this stock is currently up over 100% year to date so far. By no means are these the only stocks who are significantly increasing their dividends over time, but these are 5 that I like, and I also wanted to give you a good mix of different industries as well. One of the websites I used for my research, which you will see in the background, is Dividend. I have no affiliation with them, but they do offer good research for Canadian stocks, unlike a lot of other US-run websites. The first stock we will be looking at is Canadian Tire, ticker CTC-A. If you watched my recent weekly portfolio update, you will know that I made my first investment into Canadian Tire, so I thought it was fitting to put them in this video, as I already did some research on them. They currently have a stock price of $190.93, which could be a barrier to entry for some. Luckily, I purchased them through Wealthsimple Trade, who allows investors to purchase fractional shares of Canadian Tire and other stocks, which allows you to invest with a smaller dollar amount. Their current dividend yield is 2.46%, which isn't bad for a company that is consistently growing their dividends in the double digits. They have a payout ratio of just below 29%, which shows us that they have lots of room to continue to grow their dividends. If you look at the past 5 years, we can see that Canadian Tire has a 5-year dividend growth rate of over 17%, meaning that on average each year, they have grown their dividend by roughly 17% over the past 5 years. So just by simply owning this stock, your dividend income is increasing by a large amount each and every year. And remember, this stock has the lowest 5-year dividend growth rate out of the 5 stocks that we'll be looking at in this video. If we look at how Canadian Tire's stock price has been doing, we can see that year to date it's up almost 12%, which is great for a quality dividend stock. If we look at the past 5 years, Canadian Tire is up almost 42%. Now keep in mind this is just a stock appreciation. This does not include any dividends received. Overall, I believe Canadian Tire will see steady growth in both its stock price and dividends in the future. The next stock that we'll be looking at is Enghouse Systems, ticker ENGH. This is a software company, for those who may not be familiar with them. Now, most software companies are known for their growth rather than their dividends, and Enghouse is not an exception. Their current stock price is $59.73, giving them a starting yield of just over 1%. They have a payout ratio of 36.36%, leaving them plenty of room for more dividend raises. They have a 5-year average dividend growth rate of 17.55%, so very similar to Canadian Tire. However, their starting yield is not quite as attractive. However, if you are also interested in stock appreciation, this stock could sway you over the others who have higher starting yields. Now looking at Enghouse year to date, things don't look too good as they are down over 10%, but if we look at them over the past 5 years, they are up over 110%. Therefore, if you are willing to give up some starting yield, you may have the opportunity for more stock appreciation. Keep in mind this company is still significantly increasing its dividend, which could give you a decent yield in the future. Up next, we have the popular dividend stock Alimentation Couche-Tard, ticker ATD-B. For those who don't know them, they own approximately 15,000 convenience stores. They operate in Canada and internationally as well. Their current stock price is $48.70, giving them a starting yield of 0.72%. Now this is the lowest yielding stock in this video, but looking at the other metrics indicates that this could be a high-paying dividend stock in the future. Their payout ratio is only 17.60%, which gives me comfort knowing the company could significantly increase their dividends without affecting their working capital too much. They have a 5-year average dividend growth rate of 22.24%. Therefore, this company has more than doubled its dividend in the last 5 years, and who's to say they won't continue this trend? Looking at their stock price, they are up almost 11% year to date, which seems pretty consistent as over the last 5 years, they are up almost 52%, not including any dividends. I personally think this would be a great stock to own, and I will be looking to start a position in them as I think they will be a great dividend payer in the future. Next up, we have Savaria Corp, ticker SIS. This company produces accessibility products like home and commercial elevators, wheelchair lifts, and things like that. Their current stock price is $22.28, giving them a starting yield of 2.15%, which isn't bad for a high dividend growth stock. Their payout ratio is 50%, which does give them some room to continue to grow their dividends, but not as much as some others we discussed in this video. They have a 5-year average dividend growth rate of 24.21%, which is great to see, but in more recent years their dividend growth rate is more in the lower double digits, which still isn't bad. Looking at their stock price year to date, they are up over 44%, which is awesome for a dividend stock. Even looking at the past 5 years, this stock is up over 85% when not including any dividends. Therefore, this company might not see as high dividend growth rates as some other companies we mentioned in the future, but maybe their stock appreciation will make up for that. I still think they are a great stock to own, and they do have a decent starting yield when comparing it to some others. The last stock we'll be discussing is GoEasy, ticker GSY. This stock is definitely on my radar, but I have been nervous to buy them as they have seen rapid growth over the last 5 years. For those who don't know them, they are a parent company to Easy Financial, who is a B lender, and Easy Home, which offers renting and lease-to-own furniture. They also operate LendCare, which offers businesses consumer financing like auto loans, renovations, boats, dental, and things like that. They have a current stock price of $209.97, which means it can be tough to invest into them if you're investing small amounts at a time, like myself. And unfortunately, Wealthsimple Trade does not offer fractional shares for this stock. They have a starting yield of 1.26%, which is very low if you compare it to other financial institutions like the banks. Their payout ratio is just below 22%, which again gives me confidence that they will continue to raise their dividends in the future. They have a 5-year average dividend growth rate of 35.39%, which is amazing and could mean their dividend yield will be up there with the rest of the banks in no time. If this stock hasn't gotten your attention yet, wait until you see how the stock price has performed. Year to date, they are up almost 107%, which is unheard of for a dividend stock. Looking at the past 5 years, they are up almost 700%. You can now see why I'm hesitant to invest in this company, as I don't know if this rapid growth will continue, or if there will be a better buying opportunity in the future. All I know is that I'm kicking myself for not investing into them sooner. And that is my list of 5 Canadian dividend stocks with high dividend growth rates. It's unknown if these growth rates will continue, but if they do, you could be looking at companies that will be the future of Canadian dividend investing. Please let me know in the comments if you own any of these stocks and what other stocks you are seeing with high dividend growth rates that could be the future for dividend investing.